In today's volatile financial landscape, are you prepared for the next significant market shift?
That's right. Join renowned analysts Jason Shapiro and Dr. Richard Werner as they peel back the layers of market complexities.
We've powered their insights with AI-generated summaries that condense hours of analysis into just minutes.
Stay ahead of the game. We'll explore crucial topics from housing market dynamics to trading psychology.
Buckle up. The first insights come from Jason Shapiro, who reveals how understanding trader psychology can enhance market performance.
And don't miss Dr. Richard Werner as he discusses the alarming shift in real estate dynamics due to rising mortgage rates.
Today we're discussing mindful trading strategies with market expert John Carter.
John points out how crucial it is to understand trader psychology to enhance market outcomes.
John Carter argues that psychological awareness is essential for traders aiming to boost their performance.
He stresses that knowing one's emotional state can significantly affect trading success. John discusses how recognizing emotional triggers is vital to avoiding poor trading choices.
He encourages traders to cultivate emotional awareness to prevent negative outcomes. To improve discipline, John recommends journaling for self-assessment.
He adds that mindfulness practices can improve focus and emotional regulation for traders. John stresses the need to create a calm trading environment for optimal performance.
He indicates that improved focus through environmental changes can lead to better trading results. What future insights does John offer for trading as mindfulness becomes more integrated?
John anticipates a rise in the application of mindfulness techniques among traders, resulting in better decision-making.
In conclusion, John Carter insists that mindful trading is crucial for success in fluctuating markets.
He urges traders to enhance their emotional intelligence and commit to regular mindfulness practices for improved trading results.
Today, we're exploring the major shift in real estate dynamics with expert insights from Emily Brown.
Emily highlights how increasing mortgage rates create significant hurdles for home sellers.
Emily Brown suggests that sellers face unprecedented challenges due to rising mortgage rates.
David Lynn elaborates, indicating this volatility could result in reduced transaction activity in the real estate market.
Emily explains that the surge in mortgage rates is excluding many potential buyers.
This development forces sellers to grapple with challenges in securing expected offers. Emily cautions that a significant number of sellers now owe more on their mortgages than their homes are worth.
What factors contribute to this situation?
The stock of homes for sale is surging while property values are declining.
What predictions does Emily have for the housing market moving forward?
Emily forecasts that ongoing economic challenges may result in further home value decreases.
Emily underscores the need for buyers to proceed cautiously amid high mortgage rates.
She also encourages homeowners to formulate strategies to handle underwater mortgages to mitigate financial pressure.
In today's review, we are analyzing Dr. Richard Werner's insights on the concerning signs of the ongoing economic downturn in Asia.
Dr. Werner emphasizes that significant declines in asset prices and growing financial instability are critical indicators of the situation.
Dr. Werner observes that asset prices across various sectors in Asia are undergoing a significant downturn.
He argues that this decline is severely impacting investor confidence, potentially worsening the economic situation. Dr. Werner critiques the recent policies from central banks for their failure to stabilize financial markets.
What implications does this have for investors?
It implies a pressing need to reassess these monetary approaches to prevent further instability.
Dr. Werner articulates critical issues regarding escalating debt levels, asserting their impact on economic growth.
He notes that if this trend continues, the debt could become unmanageable and lead to a financial crisis.
How should investors modify their strategies based on Dr. Werner's insights?
Dr. Werner insists that caution is key in today's market, advocating for rigorous risk management and asset diversification.
What predictions does Dr. Werner have for the future of Asian markets?
He foresees substantial volatility and the potential for significant market corrections in the upcoming months.
In summary, Dr. Werner emphasizes the crucial need to monitor both debt levels and market fluctuations.
He recommends that investors consider reallocating their portfolios to mitigate financial risks as the situation evolves.
Today, we'll be discussing varying predictions related to the market's direction, focusing on insights from prominent investors.
These insights present compelling arguments that could influence market behavior in the upcoming months.
Several investors warn of a possible market collapse due to inflated valuations.
Conversely, some believe that a sustained rise could occur, supported by liquidity and economic recovery. One investor indicates that today's elevated valuations pose serious risks for potential downturns.
This view underlines worries about corrections arising from unmet growth expectations. Another crucial aspect discussed revolves around inflation and interest rates, which are key drivers behind market movements.
Investors closely monitor these indicators as they significantly impact market directions. Investor sentiment is largely driven by psychological factors, where optimism often supersedes caution.
Changes in sentiment can lead to rapid alterations in investment approaches and market trends. Predictions suggest a substantial market correction might happen if valuations don't align with reality.
Conversely, an extended upward market movement could occur if there is ongoing liquidity support.
Investors must remain alert, monitoring economic data and market valuations closely.
Flexibility in investment strategy is vital, whether preparing for a downturn or taking advantage of a market rise.
Today, we're diving into the recent analysis on the Texas flash floods and the associated evacuations.
Accurate information is crucial during emergency responses, especially during natural disasters.
The analysis stresses the significant risks posed by flash floods to urban populations.
Many communities are ill-prepared for extreme weather events, necessitating greater awareness. Preparedness plans in many flood-prone areas are insufficient, which can lead to serious consequences.
There is a need for greater public education on flood risks and response actions. The discussion links climate change with a higher frequency of flooding events.
The guest emphasizes the importance of developing long-term strategies to tackle these environmental issues.
The analysis also discusses the implications of flooding on real estate markets.
Flash floods can drastically lower property values, pushing investors to rethink their evaluations.
What predictions does the guest have about future flooding trends affecting homebuyers?
The guest anticipates that higher flooding frequency could discourage potential homebuyers from areas without adequate risk management.
In conclusion, the guest advises everyone to stay informed about local weather patterns and potential flooding threats.
Participating in community preparedness discussions is essential for safety.
Also, securing home flood insurance can provide protection for those at risk. Today, we're analyzing insights from the technical traders regarding market sentiment during downturns.
The discussion focuses on how investors respond when facing declines in their investments and the strategies they can adopt.
The technical traders explain that many investors react instinctively during declines, often leading to poor decisions.
It's important for investors to manage their emotions to avoid deeper losses.
The technical traders highlight that specific market indicators can indicate when to buy during downtimes.
For example, a surge in volume can suggest a potential market turnaround.
The technical traders underscore the importance of effective risk management strategies.
Employing stop-loss orders can help preserve capital, along with diversifying assets to balance risk.
The technical traders predict a gradual market recovery following downturns.
However, persistent volatility is anticipated, necessitating investor vigilance.
In summary, the technical traders recommend staying attuned to market trends.
Maintaining emotional discipline can significantly improve investment outcomes in volatile periods.
Wow, what a deep dive into some critical economic insights we encountered today.
Absolutely. Each guest offered some really thought-provoking perspectives on market trends and investor behavior.
I think it's fascinating how they all emphasize the necessity for awareness, whether it's about market sentiment or crisis management.
Right. But the disagreements really caught my attention too. The renowned investors are clearly divided on whether we should fear a collapse or expect a rise.
And let's not forget Dr. Richard Werner's caution about Asia's downturn versus the adaptable strategies suggested by the technical traders.
So true. It highlights how nuanced the market can be and the strategies investors must consider.
If you found this discussion valuable, don't forget to hit that like button and subscribe for more insightful content like this.
Your engagement helps us bring more expert analyses to the forefront, so we appreciate your support.
Join us for our next video, where we'll explore global economic developments and what they mean for you.
It's a topic you won't want to miss.